Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're having a good weekend. Checking in on oil. The bull's still running this weekly chart. Have to be getting a bit cautious up here as we are very extended over the last 2 months and haven't consolidated much. We have the RSI hitting this 70 level on the weekly and pulling back a bit, and just looking back historically, we don't often stay above that 70 RSI long on the weekly time frame. Even on this huge run we had back in 2008, it was not too long where we stayed above those levels. So just a bit cautious. We haven't even been above 70 in the last 4 or 5 years or so. So we're looking at the potential for a pullback. The pullback will be marked on the daily time frame by a loss of the higher lows. At this point, they're very clear. We have a higher low at 54.89, and then we're looking for a higher low up here at 56.74, and we're looking at the high we've seen, 59.02, as resistance. So right now, 59.02 resistance, 56.74 support. That's the range to be watching. Whichever breaks first is going to dictate momentum to start December. And if we see a bear break, we know to back off and be cautious because that weekly chart needs to consolidate and form a new higher low of support. We are starting to enter resistance on the weekly time frame back at this previous price action right around the $60 level, and that is where we are currently topping out a bit. 4-hour time frame for some more details. We did have a bullish end of the week, but we have to be cautious because if we are unable to break that 59.02 level early this coming week, we will likely see some further profit taking. So bulls want to break that level Monday or Tuesday at the latest. Otherwise, we have to be very cautious if we see a break of 56.74 because another couple dollars of downside are likely coming. USO on the daily time frame shows this clearly bullish pattern bouncing off the middle Bollinger Band support, upper Bollinger Band resistance, and just a tightening range. The range here is 1136 support, 1179 resistance. If we can't break 1179 in the first couple days this week, we'll be cautious at the potential loss of the daily middle Bollinger Band support, which has been holding for the last 6 weeks. Weekly time frame shows the extremely strong move, breaking all kinds of resistance levels. Highest price we've seen back in 2017 was $12, and we're topping out at $11.79. So a little bit of a discrepancy. U.S. oil has not broken the high of 2017 at this point. And you look at oil on the weekly chart and where we were trading back in January of 2017, and we were up at 55.21, and we're well above that level right now. So there is definitely some lag time in USO to be aware of, but overall, the bulls are mimicking this move in terms of the positioning on the daily and the weekly time frame. So that's where we stand. Looking at oil, still bulls in full control as long as the daily higher lows are maintained. We are a bit cautious because the daily chart and weekly chart are extended. There are clear support levels built on the way up that are worth watching for a potential shift in momentum, and we'll continue to check back in. I hope you have a good rest of your Sunday.